September has thrown up some interesting twists from central banks, with the latest contributions coming from the Bank of Japan, introducing a new and creative prop for the markets, and the US Federal Reserve preferring to defer another US rate rise. Well, joining us now to look at how this is affecting flows is Ursula Marchioni, Chief Strategist, EMEA, iShares, BlackRock. First of all, what's your takeaway from what we've seen?
It's an interesting time, Jeremy. So thanks for having me, first of all. If I look at exchange-traded product flows globally, month to date, so for September, it's actually difficult to decode them. I see basically an equal split, 50-50, into fixed income and equity exposures, and equally a pretty similar split in terms of risk-off and risk-on themes. So if you go back to earlier this year, you and I were discussing massive risk-off, clearly visible through exchange-traded product flows in January and February, when we saw global investors buying treasuries or gold. Moving over to post-Brexit, July and August, a big upside surprise in terms of risk-on, really accelerating emerging markets, equities and debt. And in general, equities, US equities being the biggest case there, receiving a lot of inflows and a lot of confidence, a big confidence vote from investors. Moving into September, that is not the case anymore. And even if when I look at equity flows, which usually again signal risk on, we've seen approximately 8.5 billion flowing into the space from an ETP perspective, but more than half of that is driven by the BOJ purchase. So again, it's an interesting question.
So how should we interpret this? What's the interpretation we should get out of this?
So I think what we have seen is that after the risk-on surprise post-Brexit, investors did move into a much more cautious approach. We've seen a spike in volatility, and then moving into this week, certainly to your point, an overall dovish positive surprise from the Fed and certainly from the BOJ. So let me go back to that in a bit more detail. So the BOJ decided not to move further into negative rates territory. They're obviously, to your point, starting to play with the steepening of the curve. The Fed, Mrs. Yellen, clearly hinted in her press remarks that one hike for the year is still in the cards, so December remains the base scenario, but certainly the choice made in September is on the dovish side. So all of that is now surprising markets, or giving confidence to markets in terms of a mini risk-on rally. So there's been a pickup in risk, I think, after this week. But again, is it here to stay? If I look more broadly and take a step back, I think we are seeing investors broadly starting to question again how much further central banks can go. And I think this is starting to trickle through.
Well, let's crack this open then and see what's inside. Because for equities, what's the word for the equity markets?
So equity flows are conflicting. Again, they're sending conflicting messages. So emerging market equities, big risk-on themes, continue to collect inflows. But I have two questions that I ask myself. One is the fact that the majority of that buying is coming from European investors. So it seems that the US market is moving more towards a defensive positioning, and it might be simply because the election is coming up, or it might be because of a broader discussion to be had. The second point is that even if we continue to see the inflows, the magnitude of the trend is slowing down, the pace is slowing down. So it's still risk-on, it signals risk-on, but it's a bit more moderate, I think, than what we've seen earlier in the summer. From a US investor's perspective as well, I think there is a lot of moving towards, again, minimum volatility strategies that allow you to protect from a downside move. So I think there are signs there that could be, raising questions.
How about the fixed income market? Let's move on to fixed income and ask that same question again, how it's affecting that aspect.
So fixed income flows, again, emerging market debt continues to record inflows, but it's slowing down, and it's mostly European investors. US investors have started to go back to treasuries, which again is pretty much a defensive move. Remaining in the US, we continue to see the rotation from high yield to investment grade, which I don't necessarily think is a risk indication. It's more linked to the fact that high yield have done a lot this year, so it's probably simply a repositioning from a tactical perspective. But the US Treasuries, emerging market debts dynamic, I personally find it fascinating. On the flip side, if I had to play devil advocate and look at the bright side, we're seeing outflows from gold. So again, gold is a classic risk-off diversifier. This was the first month where, up to now, it hasn't finished obviously, but since September 2015, it's the first time we're starting to see outflows. So again, I see mixed signals out there, which I'm really keen to continue to watch and decode.
Is gold the only commodity where we've seen some reaction, or are there broad commodity comments as well?
No, actually broad commodities have recorded outflows this month, which is interesting because if you look at oil, broadly speaking, we are in a stabilizing mode. So yeah, I think, going into next week with the OPEC discussion, will be interesting to see what happens there.
You mentioned OPEC, as you say. You also mentioned the elections, which are getting ever closer. We're just a matter of weeks away now there from that. Of course, Q4 just almost upon us generally. What's your comment about where we go from here? We take your point about the fact that there's a hint of a little bit of a different atmosphere up at these sort of levels. Give us some more detail about your thoughts on where Q4 goes.
So I think investors should remain tactical. They should remain very active with what they do in their portfolios, remain vigilant, continue to monitor the volatility. I personally believe volatility will pick up. There's no way around that. So within that, there will be opportunities. On emerging markets, which is probably the other big question I tend to get from investors, I think there's probably a bit more room to go. If I look at what happened with the Fed this week, if I look at oil, minus what's going to happen next week, if I look broadly speaking at China and the data coming out from there, the picture is still pretty benign. From an emerging market debt perspective, the search for yield continues. So I think that might be, from a tactical perspective, an opportunity, but certainly I would remain vigilant, and I would consider diversifiers, gold being one, because I think volatility is clearly on the rise, and big questions are kind of starting to appear at the horizon.
Can't wait to have you back in, because in 2 weeks' time, see if it's a different picture. But Ursula, in the meantime, thank you very much indeed for joining us. Ursula Marchioni is Chief Strategist, EMEA, iShares, BlackRock.